our guests who are joining us now. We have Nilesh Jain, who's joining us from Centrum Broking, and we also have Nagraj Shetty, who's joining us from HDFC Securities. Welcome to the show, both of you, and wishing you a very good afternoon. Nilesh, let's come to you. Give us a sense of what you are making on these two stocks, IndusInd Bank and SBI Card, and what are your views when it comes to both of these stocks on the charts, because these stocks are quite under pressure today.
Very good afternoon, everyone. Absolutely. So today, in fact, I would like to start with SBI Card because the stock has given a structural breakdown. A rising trend line has been broken down. The stock is trading below its 50-day moving average after today's breakdown. So looking at the overall structure, looks like it is heading towards 880 to 870 on the lower side. So any pullback from here might get sold into till the time it doesn't reclaim 950 on the upside. The structure looks likely on a weaker side from a short-term perspective. On the other hand, IndusInd Bank, in fact, after 4 days of gain today, it has snapped its 4 days of winning streak and looks like it is likely to find some bit of support near about 840, 835 levels. It has multiple support levels, so I don't see any major crack in this particular stock on immediate basis. There could be possibility of some bit of pullback or rebound from the lower levels. So if somebody is already holding the long position, can keep a stop loss below 830 and stay put with the long position. There could be possibility of some bit of a pullback towards 880 to 900.
All right, that's about IndusInd Bank. So let's watch out for this particular stock. But other than that, it's the metal bag that is seen to be shining bright. And Nagraj, within the metal counters, what is that you are making of, and which are your top bets right now? Because what we see is that fundamentally is the dollar index, which is seen to be hitting at a 3-year low for itself. And along with that, select base commodities are doing well. Any particular stock that is looking attractive at this point?
Yeah, I have two stocks, and one of them is Tata Steel. Whole metal pack is moving up, and Tata Steel is also moving above the hurdles. What we have seen recently is the strong upside momentum with the smaller dips recently. After that, it has showed a decisive upside breakout of the consolidation band in today's session. The overall chart pattern is looking positive for the Tata Steel, currently trading around 165.40 odd levels. One can look to buy at this point of time, and immediate target would be around 10 rupees above 175. One can place a stop loss at 160. My another stock is from a cement side, Ambuja Cement. Ambuja Cement has been in a continuous uptrend over the last 8-10 sessions, and it has broken above the larger consolidation band somewhere around 580, 585 levels, and currently trading higher. The overall chart pattern is looking positive. The breakout was seen along with the rise in volume, as well as the RSI is also showing positive indication. So one can look to buy Ambuja Cement at this point of time, around currently trading around 594. Immediate upside target would be around 630. One can place a stop loss at 575.
Okay, so that's the stocks that Nagraj is liking at the moment. But Dhananjay, coming back to you, give us your sense on everything that we've been seeing in the paint segment. This sector has suddenly seen so much news flow. On one side, you have JSW and AkzoNobel, and today you have CCI probe that's going to happen for Asian Paints. Give us a sense of who do you believe has the right to win, and who is going to emerge victorious from this entire news flow that we're seeing on paints?
No, I think what the regulators decide is a matter of their jurisdiction. So I can't really prejudge what they are saying. So I think it'll be incorrect to bet on that. But I would say broadly, as far as the paid sector is concerned, I mean there has been a concern with respect to competition, which has been there, and I think that's been impacting the Asian Paint performance. I would say Berger and ExxonMobil, etc., have actually done relatively better. I think the trigger for the sector is if you have the crude prices falling, there is a possibility of a margin expansion. And the names that I just mentioned have less competition. ExxonMobil, for instance, less competition from the new player, which is Birla. So basically, that is how we are positioned on the paint sector.
All right, but Dhananjay, also talk to us about the tire counters, because we just had your take on the auto space overall. But along with that, within the tire space, we have already seen the Q4 numbers were quite decent, and the managements were hopeful of a bit of a raw material basket cool off, and the lag impact when the crude was near about that $60 per barrel mark. That lag impact to impact their margins going ahead. Give us your sense on the tire counters, and also because of the correction, are you finding these bets attractive?
So I think we are more constructive on the entire auto ancillary space, and tires are included out there. I would say we are seeing kind of a lessening on volume growth as far as OEMs are concerned. So I think um, uh, that is something that is sort of a drag from a volume standpoint. But I would say that there will be reasonable amount of replacement demand because with a lag there will be, there has been a significant rising volume growth for passenger vehicles, for instance, especially the premium ones, and that will have a lagged impact going forward. So I would say that there are certain drag, but there is certain legacy, which is helpful. I would say then if the crude prices fall, I would say that should be helpful from a earnings standpoint for the tire companies.
Okay, Dhananjay, I appreciate that view and appreciate you joining us on the show as well. Thank you for taking the time to speak to us at ET Now. Well, viewers, on that note, we'll slip into a very short